Right. Good afternoon, everybody. Thank you for joining us today on this sunny day in Port Louis for our session on sustainable finance and fintech. I'd like to thank you all for being here for what I think will be a really interesting and I think timely session. With the recent COP26 summit only just over in Glasgow and still very much fresh on our minds, I think there's been a lot of recent attention on issues around sustainability, the environment and social governance matters and how fintech fits into that space. It was very much a focus of that COP26 summit. So I think it's fantastic today that we are able to welcome our speaker, Anish Chandra, who is Director of Financial Services at PwC. He has been in this space for more than 17 years of experience in financial services consulting with banks, asset and wealth management and insurance companies. So I'd like to welcome Anish and thank him for his time today. We do encourage this to be a participatory session. So if you have questions for our speaker today surrounding today's theme, please do use the Q&A function, which you will find at the bottom of your screen to submit your questions, and Anish will take those questions at the end of the session. So at this point, I'd like to say an official welcome to Anish and hand over to him for the rest of the session. Thank you so much, sir. The floor is yours.
And thanks MAFH again for this wonderful opportunity for talking this contextual topic of sustainable finance and fintech. Brief introduction to the sustainable finance topic. What is its relevance in the current perspective? How fintechs plays a role in the sustainable finance area, and some interesting case studies which have developed over the last couple of years in this space. Starting with the first agenda of sustainable finance and an introduction, I would first like to talk about how this all fits in together in terms of the sustainable development goals of the United Nations and how we can take a holistic view and look at this whole subject. So this is what we are looking at is something we call the wedding cake. It looks like a wedding cake, and there are three layers to the wedding cake. So the biosphere, the society, and the economy, and you can link the various sustainable development goals into these layers of the wedding cake. And how we measure impact from a sustainable finance point of view in the biosphere layer is we denote it by E. In the societal layer, we denote it by S, and for financial risk and return, we denote it by F. So keeping this in view, Lisa, if we can go on to the next slide. So going back to the definition of sustainable finance as defined by UNEP, it says that sustainable finance is a system that creates values, transacts financial assets in a way that shape the real wealth to serve long-term needs of an inclusive, environmentally sustainable economy. Now, focus on the word long-term because that's very crucial when we are talking about sustainable finance. Nothing is done for the short term. Now, keeping this in view and the various parameters that we looked at the previous screen, that F, S, and E, the various topologies that we can think from a sustainable finance point of view is first and foremost is what we see as finance as usual in today's world. It is all about creating shareholder value, wherein we try to maximize F. So we are just concerned about maximizing the financial returns and minimizing the risks around it. And it's a very short term in nature. Sustainable Finance 1.0 came up around 10, 15, 20 years back when we started saying that, okay, we have to have a refined shareholder value, wherein we look at still maximizing F, that is financial return, but we do denote certain connotations and certain importance to the S and the E factors, which is society and the environment. But we are still looking at short term, we are still looking to maximize F out here. Sustainable Finance 2.2 is where we start first looking at the concept of stakeholder value. wherein we try to encompass everything together in terms of F, S, and E, and try to look at optimizing the value of I, which is the integrated value. This, I can say, is still a medium-term approach, and people have been looking to maximize that I over the last 5 years or so. Real sustainable finance comes into play in the last topology, which is Sustainable Finance 3.0, wherein we are actually looking to maximize societal value and environmental value, which is greater than the financial value or the financial return that we are looking at. So this is the real long-term sustainable value proposition that one needs to achieve and aspire for. If I may move on to the next slide. So how do we look at creating this sustainable value and recreate the and relook at the value creation topology? So in the traditional financial system, the financial capital is being invested or is being lent out to the government, to corporates, to various households for either to spending towards infrastructure, spending towards linear production and linear consumption. So this has been the traditional way of how value creation was happening in the financial system. Going forward in the long-term value creation, what we see, the structure is not very different, but whatever we are looking to do is through a sustainable mode. So to a great extent, people starts asking us that, okay, how do we do ESG? Do we set up a different department? Do we set up separate people, separate kind of products for ESG? In the long term, not really. What we intend to do is embed your ESG values and ESG proposition within the day-to-day working of the business in itself. So the value chain really is not recreated, but it is being looked at from a very long-term proposition point of view, wherein you look at sustainable lending, sustainable investment, and responsible spending and responsible consumption. Now let's look at what's the value proposition or what's the current perspective of what we are talking of, because whatever we have been talking of so far is quite theoretical in nature, but how is it now becoming relevant in the real day-to-day context? So over the years, there has been various estimations made towards what kind of finance flows are required towards sustainable finance, and various agencies, various bodies have come up with various kinds of estimations. So if you see here, there was a study by the World Business Council in 2010, which said around $3 to $10 trillion would be required by 2050 to move fully towards sustainable, towards a sustainable world. Then we have the G20 estimating about 90 trillion required for the next 15 years. This assessment was made somewhere in 2015. Then we have the new climate economy defining the requirement as 6 trillion per year. However, the estimation which everyone has been looking at is the 10 billion per year estimation, which was done in the COP of 2009 in Copenhagen, which is essentially movement of money flow from the developed to the developing countries for climate change adaptation and mitigation. Now, as a lot of you would be aware that there are two concepts when we look at climate change. One is towards adaptation, the other is towards mitigation. And thus far, most of the money has flown towards mitigation, which is essentially setting up of solar plants, how to reduce carbon emissions, how to come up with sustainable ways of say transportation and stuff like that. Adaptation is more towards how do I put my structure in place in such a way that even if there is any impact of climate change, I am still taken care of. So, and that is where when we are looking and talking more in the Africa context of things, adaptation is more important than mitigation, because Africa as a continent has not contributed much towards global warming, but it has been on the receiving end of things. So that is where, from an Africa context, if we talk of, adaptation is more important, and that is where we need to see most of the finances flowing to. Now, when we talk about 100 billion per year flow that we have thought of, OECD estimates that only around 79 to 80 billion has been mobilized per year in 2019. So this is the peak that has been done. We do not have data for 2020. However, this OECD estimation has also been challenged by bodies and agencies like Oxfam. In fact, as per Oxfam estimation, this 100 billion is not achieved at all, and it is somewhere the funding has been around 20 to 30 billion only. So you can imagine the gap that we are looking at in various estimation, and even with those estimation, be it optimistic or pessimistic, we are yet to meet the 100 billion pledge that the developed nations had made towards sustainable finance. Now, moving on, how do we look at sustainable finance from the recently concluded COP26? So this is the first time where sustainable finance took a seat at the table in the entire discussions of the COP discussions. So out of all the 4 goals, the goal 3, which is to mobilize finance, was specifically aimed towards sustainable finance. And this is the first time the COP26 summit was attended by a plethora of financial institutions globally and their CEOs to discuss about how to further the whole pledge towards 100 billion that we are talking of since 2009. So what are the key takeaways from the COP26 summit that concluded just about 10 days back? First and foremost, just making pledges and talking about emission cut will not do it. So we really need to do the walk the talk. We really need to have transition plans, both at a governmental level and at individual institutions level. The transitions plans should be measurable in nature and should be monitored and looked upon on a regular basis. And if need be, over the period and the path of implementing this transition plan, one need to look at downgrading, upgrading, depending on how the plan is being executed. And lenders and investors are being insisted to look upon the progress very keenly in terms of how the plans are getting implemented. Second, which is very important and which is very important from the perspective to see whether the plans are getting implemented rightly or not, the entire push towards effective reporting. As we know, there has been a lot of reporting frameworks which have been flowing around, like the TCFD, the framework given by SASB or EFRG. These are all bodies and institutions which have come up with their own reporting framework around sustainable finance. But what happened during the COP26 and just before that was the IFRS board coming up with the ISSB framework, which is the International Sustainability Standards Board has been set up. And we hope that all the various standards that are floating around will be amalgamated into one standard going forward. And this will also make sure that most institutions are now pushed towards a mandatory disclosure of ESG related data, be it financial institutions or even non-financial institutions and corporates. Third very important point that came up during the COP26 this year was how to manage and the usage of coal, or how to abate production and consumption of coal. And that is where the whole session and the summit actually extended beyond the stipulated time, was to say that, okay, should we look at negating coal altogether, or we should kind of look at downsizing the consumption of coal. Unfortunately, thanks to India and China, the language that has been put in is saying that we will reduce the consumption of coal over a period of time and not put an end to coal right away. But now the onus has shifted towards the private sector, wherein to make sure that investment and money flow towards any kind of activity related to coal is minimized. And this will be one of the key criteria for any investment and lending going forward. This is a roundabout way to ensure that coal consumption is minimized and hence emission is checked. The last point that came up was the finance should flow more towards adaptation measures. So far, as I mentioned, that most of the finances has been flowing towards the mitigation measures, but it is very important from an Africa point of view, and especially countries that has not traditionally contributed towards emission, to look towards adaptations and be funded for various adaptation measures. Lisa, confirm if I'm audible and hopefully there are no breaks.
You're all good. Much better. Thank you.
Now, in all this, how does fintech play a role and how technology plays a role? Because as we know, in today's day and age, you cannot have anything which is really sustainable without the play of technology and innovation and fintech. So fintechs over the years anyway have been all about innovation, and it definitely looks positively towards contributing towards sustainability. They also play a very pivotal role in formulating of policies, and that is aimed towards transitioning to a low carbon world. So as per me, there are 6 key use cases of fintechs in the sustainable finance world. First and foremost, which is very important for all developing nations, is financial inclusion. Because without financial inclusion, you actually cannot do societal good at all. And if we again look at the various developing nations, financial inclusion at best is maybe at 50% or 60%. It is actually much lesser in most of the countries, but that's the best number that you can get in some of the countries, if you may say so. The fintech also helps in enabling easy access to various kinds of products in the financial from the financial perspective, like bank accounts, easy access to loans and insurance by harnessing the power of mobility. And it definitely furthers the cause of both adaptation and mitigation. So financial inclusion comes at the topmost in the value chain when it comes to various use cases applicable to fintechs. Second is, obviously you can lower your cost of delivery to a great extent by eradicating brick and mortar setups, by usage and better usage of data analytics, AI and ML, wherein you can harness a lot of data which is available within the banking system or within the financial services system. And this also enables you to personalize a lot of offers in a cost effective manner. So yes, lower cost of delivery is definitely one use case, and that helps in providing financial services. Ease of access to capital, we have seen that there are a lot of use cases, and I'll talk about it later on in the session, is how your process automation, intelligent process automation and DLT technology are enabling transacting in bonds in a more highly cost effective manner. So this allows ease of access to capital, especially by entities which hitherto has been unable to access capital very freely and easily through the capital markets. Fourth is targeting investors, and here we are not talking just of institutional investors, but we are also talking of retail investors who want to pool in their money into various kinds of sustainable projects, or say renewable energy kind of projects. So emergence of P2P and aggregator platforms have enabled that. So that's a very good use case that we can look at. Deploying sustainable finance has become very sustainable. Investable surplus has become very easy and cheap through these platforms and usage of fintech. Fifth point is improving the risk management process, and students of finance would know that finance is all about controlling risk or measuring risk. And if we are able to externalize risks, which were hitherto not possible, but is now possible through the usage of technology, we can internalize a lot of risk and hence better priced products that we can bring onto the market. So improving risk management is another key use case that we look from the perspective of fintech and sustainable finance. Last but not the least is how to inculcate responsible consumer behavior or sustainable consumer behavior. So we are able to track various customer behavior through our apps and various kinds of other activities that we do through our mobile, and then create nudges to the consumers that, okay, you are creating a certain kind of carbon footprint, how you can minimize that, how you can make use of certain activities through your mobile and make your activities much more responsible in nature. So with these key use cases in mind, let's look at a few interesting case studies that we have come across in the world of sustainable finance of late. So I have broken it up into a couple of areas. One is in the area, a couple of them are in the area of retail finance, one in the area of wholesale finance or corporate finance, and third in the area of insurance. So I don't know if any one of you is aware of Ant Forest. Ant Forest is basically an app by Alipay. How it works is essentially it allows you to calculate your carbon footprint or track your carbon footprint. And based on the transaction history, the app tells you, okay, what kind of carbon footprint you are leaving on the environment. Now, based on these carbon footprints, certain carbon points are accumulated by sustainable usage. So the app essentially nudges you to improve your consumption pattern, and that allows you to accrue certain carbon points. Now, once you accrue certain carbon points, it allows you to put it in a virtual sapling plantation, and you can grow that sapling into a tree. These are all done through gamification at this point of time. Now, once the sapling grows into a certain size through your gamification and accrual of certain points, Alipay goes and actually plants a tree in the desert area of Mongolia, and that is how it is enabling the entire value chain of how you can make impact on the environment through your consumption. Now, what are the impacts that we have seen already through this particular Ant Forest app? We have seen that the Ant Forest app has been able to plant almost 100 million trees since till about 2019, and it already has around 500 million customers on its platform, and it has helped save around CO2 equivalent of 1.5 million tons of CO2 equivalent, which is a huge thing. So this is how retail consumers like you and me are actually enabling sustainable and responsible consumption, and also ensuring that there is a positive impact on the environment. And what Ant Financials also do is through the monitoring through drones and various other satellites, it also allows the users to actually see how the trees are growing and how is it creating that social impact, and each individual feels that they have done something for the environment and the society. So this is a fantastic case study that has been developed, and there is no reason why something of this sort cannot be replicated in closer to our world. Something similar has also been done by Nordea Bank, wherein the digital app of Nordea Bank, which is a Swedish bank, it allows you to track your individual carbon footprint that you are generating through the usage of the app. So these are similar use cases and case studies, and I am yet to see any of the nearshore apps or digital finance platforms are doing it, but I think it's a matter of time that one can replicate the same in closer to our home. The second case study, which is also around the retail services, is a cloud lending platform or a crowdfunding platform, as we call it, BetterVest. It's a German platform which allows to pool investor money starting from 50 euros and going up to 50,000 euros, going towards various kind of sustainable and renewable energy projects. Now, the eligible projects are obviously evaluated by a committee within the BetterVest team and monitored throughout the investment period. So whenever the project owners commit to paying off the investment over the fixed period term of the particular investment based on savings generated on the carbon emission side, and whatever savings are generated over and above after paying off the investors are kept within those projects or within those companies. And how BetterVest makes money is essentially charging a percentage of the funding amount. So this is very similar to what we see in Mauritius, also what some of the crowd lending platforms are doing, but aimed very focused towards only sustainable projects and nothing else. So as you can see that the Betterment through its BetterVest through its platform had also been able to save around 326,000 tons of carbon emission over a period of time. And on an average, they save around 8,200 tons per project. That's what the estimation they have done. And from a financial point of view, it generates an average rate of return of about 7.25%, which is not too bad looking at the current context and the current financial markets. One of the other case studies that we saw in the corporate banking and the capital market side is the Green Asset Wallet, which is a Stockholm-based organization, and they are also into funding through green bonds, but by using of DLT technology. I will just show you a quick video. I will not play the entire video, but a part of it to let you know how this entire piece works.
Is a blockchain-based technology platform aimed at scaling and supporting the green debt market.
The Green Assets Wallet combines two of the most important, promising and exciting trends of today's financial sector, which is the digitization and green finance.
The wallet is the result of a collaborative innovation between green finance experts, leading capital market actors, and technology innovators. We have been very fortunate to work with the best in the market.
Green Asset Wallet in one word, I say collaboration.
The green debt market is experiencing a fantastic momentum, but this market is still far from delivering on its full potential, and we want to help change that.
The biggest problem that we face is the scarcity of green bonds available to invest in.
Since the green bond market is too small, if you compare with the demand.
Some issuers claim that there is an additional work required to issue a green bond because of the extra administration.
A lot of companies are not existing bond issuers.
To use technological innovation like blockchain technology to scale up green finance is exactly the kind of outside-the-box thinking that we need.
With the Green Asset Wallet, we are using technology to, on the one hand, inject efficiency to cut costs for issuers and help scale the supply of green debt, and on the other hand, inject transparency and trust to make a wider range of investment needs accessible to investors.
At Cicero, we see transparency and environmental integrity as key to the continued growth of.
I cut it short. I can share the link, but this is again another great case study that we can look in this space. Is my screen still visible, Lisa?
Yes. Well, it was a second ago. And you're restarting now. So yeah, we can see your deck.
The last case study that I want to put up is in the insurance space. This is about an insurance company which is called OCO. It's basically started, it's an Israeli fintech, specifically into crop insurance for emerging markets. Effectively, what it does is it uses a lot of technology around satellite or microwave kind of technology to obtain hyperlocal data, and that hyperlocal data then allows them to kind of define the various kinds of risk elements and quantify the risk in such a way that it allows you to then embed that into the pricing mechanism. So making crop insurance more affordable to farmers, which otherwise is mostly they do not go for insurance because of cost factors. And it also allows you to enable the entire claim management process in a very seamless way. It also does API-based integrations with various ecosystem players like microfinance companies, your NGOs, etc., to further the cause of democratizing insurance in this segment of the society, if we may say so. Yeah. And OCO has its presence in African countries like Mali and Uganda, and it has also worked in far Pacific islands like Fiji, etc. So this again is a very unique way of using fintechs, and we are using we are looking at the usage of fintechs in a very big way in the insurance space, and that will come up in kind of pricing that we are looking at, differentiated product offerings which are not standard, and things are just starting up from that perspective. So with this, I think it ends my presentation. I am now happy to take your question, and apologies again for the hiccups in the beginning. Can't do much about it because there was a lot of internet connectivity issues in the office, but apologies again, and happy to take questions. Lisa, up to you.
Well, thank you very much, Anish, for this very interesting presentation. I would just like to encourage everybody out there, do please submit your questions. Anish here knows a lot about this space, and this is your opportunity to ask him everything. We do have a couple of questions that have come in, but while we're addressing those, if anybody else would like to send us in their questions, please do use the Q&A function at the bottom of the screen. So we have a question that says, is GRI reporting still important?
Sorry, come again, Lisa?
Is GRI reporting still important?
Yes, it is still important, but it is from the perspective of there has to be certain alignment in the reporting standards. I think where the world and the financial institutions are grappling with are multitude of reporting frameworks which are being floated. None of those frameworks are really mandatory at this point of time, except SASB and to a certain extent TCFD in Europe going forward from 2022. GRI also is one of such frameworks, but what we see is probably the launch of the new sustainability reporting board by IFRS. A lot of things will be culminated into one standard reporting platform. Otherwise, standardization will become an issue globally.
Thank you so much for that, and thank you for your question, Simon. Our next question is from Ishan, and it says, the Bank of Mauritius broke the taboo and mentioned the necessity to address greenwashing in its sustainability bonds framework. However, there is still a lack of proper regulation with regards to this phenomenon on the side of the FSC. Are there any fintech tools which might help in addressing this reputational risk proactively?
There is no one fintech tool that we can think of, and it is very, very important from the perspective of the regulators here in Mauritius. If you talk of the Mauritius context, yes, it's good that the regulators are talking about greenwashing and stuff, but these are jargons. I mean, it's very easy to talk, but one has to come up with the right framework so that everyone is compelled to follow a certain way of embedding ESG into their day-to-day business. And there are no single fintech tool which will allow you to ever do that. It's just that once you come up with an ESG framework and how you embed, then there are a plethora of tools that one can help you, starting from launching of new kind of products, monitoring of the ESG progress, reporting, and various other means and ways.
Okay, thank you so much for that. So that's it for the questions that we've received so far today. If anybody out there has other questions, you still have an opportunity to ask them now. Otherwise, you can feel free to submit your questions to us at MAFH, and we will forward them on to Anish, and he may be able to help you with those questions. So I'd like to take this opportunity again, and unless we have questions come in the next minute. Oh, yeah. So this question is, will you be able to share the slide deck? Anish, I think we should be able to share the deck. Is that okay?
Yeah, it's fine because it's all public information, so nothing proprietary.
That's great. So we will make sure that everybody who has attended today's session does receive the slide deck so that you can go over in more detail. So I would like to thank very much Anish Chandra for his time today, for this very interesting presentation and this whirlwind trip through the world of ESG and its pertinence to today. I'd like to apologize on behalf of the MAP team for the technical difficulties that we had at the start of today's session. These things unfortunately do happen. As Anish said, they are a little outside of our control, but I'd like to thank Anish very much for staying with us and for finding a solution that has helped facilitate today's session. So thank you, Anish, for today. And I'd like to take this opportunity to invite everyone, if you are not already following MAFH, if you're not already signed up for our mailing list, please do so as to stay in touch with us, learn more about upcoming events. And I look forward to seeing you all at an event in the future. And Anish, thank you so much for your time today.
And thanks to MFH, thanks Lisa and the team, and thanks to everyone who participated. Thank you.